Hello everybody. So in this video I want to address the question, how should we judge the Bitcoin miners that have moved to AI and high performance computing, the Bitcoin miners who have CoreWeave envy, as I'm gonna call it, and who identify as GPU cloud businesses, or at least want to become GPU cloud businesses, and this makes the analysis pretty complicated of these miners. So let's go first through the miners that do that, the miners that want to have this AI association. So Riot, as you can see, Riot blockchain is going all in on the AI opportunity, highlighting the high demand for data centers. If you move on, IREN of course has been the least conviction Bitcoin miner out there because they've always sold all of their Bitcoin, but they're doubling, it's not even doubling down at this point, it's even tripling down. They're tripling down on the AI HPC business, and to the point that you listen to the call, it's the most thing that they talk about. This is not it. If you look at Hut Hate, I know some of the people in my audience like Hut Hate quite a bit. Hut Hate, you go on their website, they barely even talk about mining anymore. Now it's all about HPC in the future. Welcome to the new Hut Hate. They have a video and they put AI forward. Moving on, right? Cypher is another one. You can see Cypher's got a lot of going for it. Only $23,000 of electricity to mine a Bitcoin, 2.7 cents a kilowatt hour. Great access to electricity, and you go down the slides, what do you find? HPC. They're walking on HPC and selling HPC. And that's not it. That's the last one. Say Hive. Look at Hive. Hive's HPC strategy and AI vision is all about, trying to be towards late 2025 having 100 million in annual recurring revenue in AI, and they are investing heavily in an AI, and they all have this NVIDIA cloud partner in AI, by the way. That's something that they all say they are because they are working with the supplier. They're essentially like on the suppliers list, roughly. That's roughly the way I look at it. And so you have all of these Bitcoin miners who used to be pure play Bitcoin miners who are now moving to AI HPC, and they all want to be in the AI business. And so this video is about a little bit of my thoughts. Before I do though, I want to give a special mention to Mara, and Cleanspark for sticking to Bitcoin, because as far as I'm aware, these are the only two who are just sticking to Bitcoin. So for example, Mara, a special mention to them. And I think Mara deserves even more credit than Cleanspark on this, because Mara is not only not selling, but as far as I'm concerned, so they're the only ones that have actually done a convertible to buy Bitcoin, right? They've issued debt to buy Bitcoin. They have not issued debt to buy miners and electricity, which will then be used to buy Bitcoin. No, they actually issued debt to buy Bitcoin. I would love to see Mara tap the ATM as well, but with their price to NAV, they're not able to do that. If they traded at a higher price to NAV, I'd love to see them do that. And this is the Sailor's wisdom here shines, which is, it's very interesting that all of these Bitcoin miners now are kind of selling the Bitcoin, or they're not doubling down on the Bitcoin. And this is where Sailor says, Bitcoin is on a need-to-know basis. And when you think about Mara, and when you think about why Mara is taking that BTC treasury company move, they're taking that move because they have to. Why do they have to? Because they have an aging fleet of miners. So they need BTC more than the other miners. The other miners have newer equipment. They have AI HPC as an opportunity. They have fresher capital. They can dilute with fresh shareholders, and so they're going after the AI HPC opportunity. For Mara, Bitcoin is the obvious opportunity because their miners are getting old, and this is a bit of an older company of energy generation and spare energy generation company, and so their aging fleet, I think, is kind of a blessing to Mara, which is why I could see them actually do the transition towards a Bitcoin treasury company. I'll still give a special mention to Cleanspark, because even though they decided to now sell some of their Bitcoin to fund their operations, and kudos to them, they did not enter the AI HPC biz. So we have Mara and Cleanspark who still are not in AI HPC, and so kudos to them for sticking to Bitcoin. But that still doesn't help us as investors, right? Still doesn't help me as an investor, because on a fundamental basis, I don't have any problem with them going into the AI HPC business. I don't have a problem with that. The question is, are you going to earn a return? And so I see a lot of questions. I see much more questions in this industry-wide pivot than I see answers. And so the quick answer for now is, I don't know if this pivot is a good thing for now. For now, I don't know. Because yes, the depreciation speed of GPUs is insane. Yesterday at Computex, a roadmap even more intense was announced by Jensen Huang from NVIDIA. And so there's going to be even more CAPEX for the next wave. And every 2 years, we have a new generation and a new wave of CAPEX. This is crazy to think, but compared to the value of a GPU, the value of a miner, the value of the actual computing equipment of the miner, these Bitmain ASIC, S19 miners or whatever version they're on, they actually have a pretty stable value compared to GPUs, right? Mara makes them last up to 7 years. And of course, that's the downside, the speed of the GPU. The upside, and I see that too, the upside of the speed of a GPU is that we have unlimited demand. The demand for compute is absolutely unlimited. It's very high demand. And I think the problem is CAPEX. And this is where I get back to the issue of having to invest in the GPUs, but not just the GPUs, it's also the data centers. Because the miners believe that they can turn their sites, which are, bare bones, more rustic sites. Sites for Bitcoin mining tend to be pretty rustic. And they think they can turn them into higher tier data centers, which they probably can. But with enormous capital expenditure, enormous capital expenditure, and the original shareholder base who own these miners for Bitcoin mining mostly, they might have not signed up. They might have not signed up for that capital expenditure to move from a tier 1 data center to, say, a tier 3 or a tier 4 data center, which is what you would need to, say, get hyperscaling clients. Changing the tier of a data center is going to require tremendous investments in uptime, in transformers, like not AI transformers, but actual physical electrical transformers to have uptime, connection, HVAC system. There's a lot of investments that you may have to do for being a higher tier data center, which you don't have to do when you're just a Bitcoin miner. And so, yes, GPUs are in very high demand. AI HPC compute is in very, very high demand, but the CAPEX is going to be huge, and that is my concern. And right now, I think some of the shareholder base is still leaving the miners because they are in the miners mostly for Bitcoin. Don't forget Bitcoin. You have a lot of Bitcoin maxis. You have a lot of people who just want to have Bitcoin-related investments, who are only interested in Bitcoin-related investments. So, that's why we are seeing these movements in the shareholder base. And so the other question is, do the ambiguous miners, the miners who do both things, they do both mining and AI HPC, do those miners belong in the too hard pile, right? The famed too hard pile of Warren Buffett. They're high risk, but they're potentially very high reward. But what I know for sure is that this pivot is hard risk in terms of burning capital into shifting the data centers. And I think a lot of these leaders, and I don't blame them for that, but I think a lot of these leaders have CoreWeave envy, because if you look at how the market has treated CoreWeave, it's been nothing short of amazing. In under 2 months, CoreWeave, which is really a backed by NVIDIA, pure play, GPU-based data center company, they've more than 2x in under 2 months. And so I see how you would have CoreWeave envy as a Bitcoin miner trying to be AI HPC. As my viewers know, in this space, I much prefer Nebius. And the main reason why I prefer Nebius is actually because of their strategic investments in ClickHouse and in other businesses. When I look at Nebius, I'm thinking the market cap can be mostly explained by the side investments. So I view Nebius as a no-brainer. And maybe you could have a situation with that with Bitcoin miners if they have such a huge stack of Bitcoin placed on the balance sheet, then you may think, okay, well, because of that stack on the balance sheet, I'm really getting the AI, kind of for a very cheap price if on a Bitcoin adjusted enterprise value basis. But that's provided they don't dilute you too much. Diluting for mining Bitcoin works beautifully. Diluting for AI, I don't think has been shown to work just yet. We need more of a proof of concept. So anyways, What do I know? Do you know what I think? What do I know? The point is, GPUs, stacking GPUs, is that a good idea? Maybe in the short term it's gonna be very valuable. Maybe right away it's very valuable. I know it's very valuable to the makers of chatbots, the Grok, OpenAI, the users of AI in the business model. It's very valuable for them to be in that race and to get them before everybody else, because you get the better model before everybody else. But what I think is more valuable than stacking GPUs is stacking the power access. And I've gone back and forth on these miners, trying to value them based on how many hundreds of thousands of dollars they've paid for their megawatt, for each megawatt of power access. And from what I understand, it's typically between like $300,000 and $1 million that they end up paying for one access of megawatt. And I think this is where really the value of these miners may be. How many megawatts can they have access to fully developed, right? Because once you're connected, you have that power, you will be able to silently benefit of the rise of the value of the access to power. And I could not recommend enough this talk right here. It's actually an interview. It's TED Talks, I find them boring often. This is not that. This is an interview. So if you look at Eric Schmidt, right, former CEO of Google, the AI revolution is underhyped. He really touches on the electricity and what's going to happen to the demand for electricity. This video makes me revisit entirely my exposure to energy investments, and Bitcoin are a way to get exposure. Bitcoin miners are a way to get exposure to accessing the power, because they have access to a lot of power. And so maybe valuing them based on the power access is a better way to play. But in this case, my point still holds that if you're betting on the miners because of the access to the power, maybe you don't want to have them spend billions and billions of dollars collectively purchasing GPUs from NVIDIA. Maybe that's not something, or purchasing data center equipment for all of the data center company. Maybe you just want them to mine Bitcoin, don't do anything with the site, just mine Bitcoin, and then just wait for the access to 1 megawatt of power being valued at 600,000. Wait for that access to a megawatt of power to be valued at 3 million. And then sell the land. That's what I would much rather do. And I think a company see them do. And I think companies like Cleanspark or companies like Mara are much more likely to just sit on the power access. They mine until they can, and then at one point they might be able to monetize that power, that access to power, to a company who then will do the CAPEX into the GPU business. So that's kind of my take on this. That's kind of how I view it. The mining companies and the miners remain largely, to me, a question mark still to this day. I don't have an answer, and I know a lot of people who invested in these companies, just like me, they had much better hope. I had much greater hope for the miners, and so they stick out. They stick out in my portfolio as this sore thumb, and I don't know what to do with them. I don't know what to do. But what I do know is that I'm not increasing my allocation to miners. On the other hand, I am increasing my allocation to, well, right now, MetaPlanet, because my bag is very full of MicroStrategy. But right now, I'm increasing my allocation to MetaPlanet because the way, and if the last 2 years have shown us this, to me, the best way to actually grow Bitcoin quickly in a company wrapper, the best way to do that is via the ATM, via tapping the ATM. You dilute, but you accrete. You increase the number of shares more slowly than the money you take in to acquire the Bitcoin. And that is why MicroStrategy has performed so well, and they've done much better in increasing the Bitcoin bag. And MetaPlanet has done even more wonderfully because they're starting from such a small base. And I think BTC treasury companies going forward, they're going to be a better play at actually stacking Bitcoin than miners with actual physical operations where they have, where it's tough. They have to, in the case of Cleanspark, private jet, they have to fly the teams all the time between the different sites, and you have to deal with physical components, and physical components, they break down, power goes out, you have all sorts of issues, you need all sorts of insurance, all sorts of operational issues, which you don't have by just tapping the ATM on a Monday, right? You don't have that issue. And so this is a much simpler way, and it's a way that is showing promise. And so But I do think the miners still have value. I just don't know how to value them, and I think the market doesn't know how to value them. And this CoreWeave envy, as I call it, is making it more ambiguous and making it even harder to value. So, anyways, this was not investment advice, not financial advice. This is just entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.